Hi, everyone. Happy Wednesday. Welcome back. Today, we're going to talk about an interesting podcast. Well, interesting for me. So, as many people are watching The Watcher, I was pretty much inspired as I was watching the show that they kept talking about buying a house through an LLC. So I thought that could be interesting to discuss. So I thought that if you're buying a house through an LLC, some people might not know what it is. So Irene and I talked about this podcast before. So it's a limited liability company. So rather than using your name, a person could organize an LLC and buy a house or investment property through that. So basically, it could be just a single member LLC, it could be corporation, foreign entities, individual, other pre-existing LLCs could qualify as members of new LLCs. So some of the individuals who are looking to shield their liability when purchasing a property, that would be a good fit to buy a house with an LLC. It could also be useful if somebody's trying to make it as a rental properties to become landlords. So it would have its own um, AIN number, it would have its identity, would have its separate bank account, and you could basically put it through the books of that company and have it as a separate business. The only downside is that loans for an LLC could be a little bit tricky. So sometimes it would be required to get 25% down payment, although there are other programs available. So it could be just certain restrictions, but some of the LLCs might be using, different sources to kind of fund this transaction. Well, some of the LLC members might have to personally guarantee the loan, and so that would kind of take away that they have to personally sign, or they might have to get private money lenders, some short-term loans, or high interest rates. But the pros for buying through an LLC is that it gives you the asset separation, it gives you limited liability, it gives you tax benefits. So basically, any taxes on the property would accrue to the LLC, and you will not need to pay personal taxes. So you could save significant amount of money by doing that. Some of the downsides could be costs, it could be limited financing I was talking about, or it could be loss of capital gains benefits, because if you have a personal property that you're buying, you could lose some of those tax benefits. But I think I'd like to also go back to Irene and talk about the risk level and the privacy associated with buying through an LLC.
Hi, everyone. Thank you so much, Jane. Yes, so a lot of our clients do ask us about buying through an LLC, buying in their personal name, and what the difference between those two are. So we always actually start from the accounting aspect, and we always ask that there is a consultation on the accounting side of it. But once that's cleared, we always talk about the pros and cons, and we go through a very similar list as Jane just went through. And one of the major pros for our clients is the risk level protection associated with LLCs. And what I mean by that is if there is, this is just a few examples because of course there could be many others, but if there's a slip and fall, for example, or if there is a claim made that's outside the insurance policy, individually, the individual may have liability and that may go on other properties that that individual owns. Whereas with the LLC, for the most part, you have that protection and you're protected as long as everything was filed correctly and as long as everything is registered with all the proper documents and proper insurance, then you are pretty limited just to that one property itself. And so if you do own multiple investment properties, that it certainly is beneficial to ensure that any risk associated with that property remains with that property. Also, a lot of our clients have a investment group that comes in to purchase certain properties, especially if these are going to be multi-unit. What we find is that it's better if there are any future partner disputes to limit those to that specific LLC and that specific property rather than have it in the individual name, which really opens up the books for possible accounting across the board for any personal assets that the individual may have. The second reason why we are asked about LLCs and whether that's the best for property ownership is for privacy. And there are certainly ways to ensure that this is done correctly. And sometimes our clients will come to us after they already have owned the property for a number of years and they want to transfer it over to an LLC so nobody will know who owns it. Of course, their name still remains there. And of course, it's not recommended that the LLC have any information having to do with their name, like their first and last name LLC. Probably will not help for privacy reasons. We see that more often than I would like. But it does help if it's from the very beginning. So if it's from the time of contract signing and you enter in with an LLC, of course, there's the limitations that Jane talked about with being able to obtain the financing that way. But if it is from the very beginning, then it is very difficult in New York, or even if it's in other jurisdictions, to obtain the full information of the person who owns the LLC. And so leaving that level of anonymity between the property owner himself and who may own that LLC as well. So there are certainly there's that big level of privacy and big level of protection there. We see that a lot with our clients who are public figures. We see that a lot with our clients who have other properties and what I'll call businesses with government contracts. They may or may not want their name coming up on all of their property because they may have contracts with individuals with other businesses through the government. And so they may not want that to be public record as well. And that's really there, but we also see that coming up very often with investment groups as well, where our investment groups, because there are so many partners over so many multiple projects, they just don't want to have their primary residence or any other property that they may own with other partners having any of those documents out in the open. Because otherwise, every single partner for every percentage that they have would have to be listed on that deed. Your alternative here is have everyone be part of the LLC and just that LLC to own it 100%. And then that assists with no one finding out who owns what percent, unless they're really, of course, doing an investigation into the company, or it's by court order, so on. Otherwise, it does leave that level of anonymity. But as always, if there are any questions on this, on property ownership through LLCs or LLCs in general, please feel free to reach out to Jane or I anytime. Thank you so much, everyone.
Thank you.